Hello and welcome back to Commodity Conversations by the team at Mercado, the podcast where we aim to keep you up to date with the latest trends, drivers and moves in livestock, grain and fibre markets. I'm Olivia Agar. Thank you for listening in to another episode for what is some big news stories this week and a lot of factors driving ag markets to get a handle on. So lucky we have Robert Herman and Adrian Ladaniski from Mercado to dive into them for livestock this week. The big headline that caught us off guard earlier in the week was the cases of mad cow disease in Brazil and the immediate halt on beef exports to China. The 2021 harvest has also started in central Queensland, and we also got an update on what to expect this harvest. So ABARES released their September crop update, estimating that winter crop acreage is estimated at a record 23.24 million hectares, which is 2.7% higher than last year and mainly driven by WA. But winter crop yields are forecast to fall from last year's levels in most states. So while yields are still tipped to be above average, production's unlikely to hit those record levels. And on the back of that news, the ASX wheat futures did fall $4 a tonne over the week to $335 a tonne. The wool market bounced this week in some positive news though. Prices were up with the Eastern Market Indicator lifting 2%, and that was even with bales sold being 7% higher than the week prior. So higher price, higher supply, a very good outcome. And now I better leave something for Rob and Adrian to talk about now, but I know they have a lot to recap on in livestock markets, so I will hand over the mic after a thank you to today's Commodity Conversations sponsor.
Thanks for tuning in to Commodity Conversations. This week is brought to you by ProAdvice. ProAdvice offer tailored services to suit your accounting needs. They have a long history of working with farming families and they understand the day-to-day realities and challenges of farm life. Whether it be strategic and succession planning, improving your communication and decision making, or accounting services and business software solutions, ProAdvice will help your farm run more efficiently. Hop on their website or give them a call to find out more.
Well, Rob, it's been a really upbeat week in cattle with heavy cattle finally coming off that 3-week slide that we saw where they come off 7% and they've jumped an extraordinary 9%. The ECI's back over 1,000 for 2019. And in general, the sentiment within the market just seems much more positive, Rob. I guess overall, what we're looking at is that the supply-demand balance has essentially tightened substantially, especially for young cattle, where we get quite low volumes of ECI-eligible cattle at the moment. We were seeing a little bit of a price depression last week in central northern Queensland, with the key areas of North Roma Store coming off over $1 last week. But they've lifted back up now to 9.88 cents as a result of their yardings coming down about 24%. Internationally, the ICL's moved back a little bit, but we've just come off Labor Day in the US, and also the Australian dollar was a bit stronger last week, which depressed the prices in Australian dollar terms. Look, according to Steiner, buyers will generally settle their laurels around about this time of year. So a bit of a dip in the ICL key prices is not really that much of a surprise.
The other big news of the week, Adrian, was first of all Brazil notifying that they had a BSE case, and then the late news of the week saying that they wouldn't be out of the market for long. So I suppose that's got markets in a bit of a swirl, trying to understand what all that means.
Oh, that's right. Look, there's a lot of excitement over that. I guess considering that Brazil accounted for over 40% of China's imports, and more than 60% of their production was heading out to China, and that, not to mention the fact that they're the biggest exporter of beef in the world at 2.5 million tonnes, which is close to double what Australia does. It could have been absolutely massive news, but it's all sort of fizzled out now, hasn't it, Rob? So,
yeah, it has, and I suppose that you could take a cynical view and say, well, perhaps that's a pragmatic approach given the tight supply of red meat protein in the world. But we do know that there's massive supplies of beef in South America. And of course, we all watch that every year, thinking that when is it finally going to really impact on us? But it just seems like there's something all the time that comes out. So is there anything else for this week that you sort of thought was beef orientated that was noteworthy, Adrian?
On that mad cow side of things, Rob, look, I guess the government response is essentially looking like it's all been brushed aside. But a mad cow scare from South American beef, you look at it, and that certainly can't be good for consumer sentiment towards imported beef from South America. Now, the volumes might still be going into other countries, but what will consumers be thinking about eating Brazilian beef going forward? And will that actually be beneficial to other countries with a better traceability history and animal health history like Australia?
Yes, well, it's a pretty open questions, and I think, Adrian, my preference would be on the side of the country that doesn't have BSE, but there's no doubt beef, like a lot of commodities, finds a market for almost every bit of the animal, and it finds a market for almost any animal that's slaughtered and put into the market. So the South American beef will continue to find markets. I would say, without any, I'd say with a lot of confidence, that this is one thing they would have rather not had. I'm just going to, it's interesting, we don't get any competition for our lamb and sheep meat from South America. It's not a very big market over there. And as we've talked about before, we are the largest exporter, and along with New Zealand, we dominate the export market of lamb and sheep meat into the world. But this week, I was interested in reading Liv's article, and she titled it "Snakes and Ladders for Lamb and Mutton" on Mercado this week. And I guess the snakes and ladders is referring to the fact that the Eastern States Trade Lamb Indicator was actually dearer, and the mutton indicator was actually cheaper. And it's a funny thing, we would have thought back a few months ago when we were doing our spring projections that at this time of the year, the Eastern States Trade Lamb Indicator would start to get softer and weaken based on supply. The supply is running a little bit behind in terms of the lambs being finished. Not in numbers, they're not running behind, but in terms of where the lambs are situated. And we spoke to an agent this week, and in New South Wales, another one in Victoria, and they were telling us that the lambs are 2 to 3 weeks behind because of the wet and the cold winter.
That's right. Well, sheep do need a little bit of sunshine to go well, don't they, Rob? So
yeah, look, it just puts the shine on the lambs, especially, and people talk about them going woolly, which is just really saying that they haven't really grown into their skins yet. They look a little bit shaggy, but that'll change. But what was interesting is that even though we've got good supply coming through through the slaughter chains relative to other years, the pressure that's being felt by processors with the constraints as a result of COVID are starting to kick in a little bit. And I think that might explain why we saw demand for mutton ease a bit and the demand for lamb remain strong. And it could mean that there's a switch away from mutton slaughter on the chains to take advantage of this spring lamb. And there are a couple of factors in that. We had Fletchers in Dubbo were impacted by COVID and had to shut up and then opened up and then shut up again. And you've also got the meatworks in Victoria being told that they have to reduce to 80% of capacity to as a government directive in their mitigation and efforts against COVID. The Australian Meat Industry Council, and particularly Patrick Hutchison, was really vocal this week in calling that out as being pretty poor form. And I think we've all got our views on that perhaps it is a bit of an overreaction by the government. But it's been interesting that the difficulty that processors are having is not impacting on the market in terms of the lamb price. And I think that underscores the demand, the demand that we suspect is out there. I think it also is going to play out into some frustration for these processors, Adrian, because they're going to see lamb supply ramp up. There's no doubt about that. But their ability to capitalise on that when you've got good supply and good demand is going to be curtailed. It's going to be curtailed, firstly, because they're restricted in their processing capacity back to 80% of what they were, but also in their ability in regional areas to attract labour. And we spoke to Gundagai Meats, to Will Barton, a few weeks ago, and he noted that they normally increase by about 20% their labour force, and that's going to be difficult to do. So right now we're seeing lambs coming onto the market that we saw a big offering of merino lambs on Auctions Plus again. We're seeing lambs come onto the market that are going to be turned out and come back in again next year. And as our analysis is showing, that's a pretty good move. It's a good move for the processors because it pushes their supply back and spreads it out a bit more. But we think it'll also be good for price because that heavy lamb indicator, and I know Liv made the comment this week, heavy lambs continue to test their limits and rose another 21 cents. They're sitting at 966 cents a kilogram carcass weight. Now, while we can't foresee the future, what we can see is what happened in previous years, and that is that the February, March, April heavy lamb price is usually in line with where the market is now, or maybe even slightly higher. So if that's the case, then these lambs that are being turned out are going to come back in as heavy lambs, end up probably in the US market where most of those heavy lambs are destined for, and return a pretty good return. So, Adrian, it's interesting. We've got, on the one hand, we've got a lot of international factors in the beef market, but in Australia, we've got a lot of domestic factors impacting on the lamb market. So I guess that's the sort of dynamics we see in markets, and that's what keeps us all interested and engaged.
I guess one of the fortunate things, I guess, we look at here with the domestic lamb market, particularly this season, is that we're not in a drought situation at the moment. Our backs are not the backs of producers aren't up against the wall where lambs really need to be turned off. They have options to hold on.
It's a good point. They not only do they have options to hold on, but if they're deciding to sell their lambs as part of their normal program, there's plenty of people lined up to buy them. So we're seeing prices that range from around about $145, $150 for merino weather lambs on Auctions Plus, up to $200 a lamb for genuine, well-bred restocker lambs. So people are actually turning those lambs out. It's always a bit of at those high prices, people think, well, are we making a big mistake here, and is it going to all turn pear-shaped when we come to sell them? What we're seeing with the demand for heavy lamb in the US, the likelihood that demand is going to be maintained through into the new year, we're seeing that the prices we're seeing now for heavy lambs, and noting Liv's comments this week that they almost set another record, we're expecting that those prices will hang around and certainly be there for when these lambs come back in. So that's good news. And as I noted today, talking to one of the agents, I said, if you're putting on a kilogram of carcass weight at $9 a kilogram, it's a different equation if you're putting on a kilogram of carcass weight at $5 a kilogram. So those high cents per kilogram come into play when you've got, good lambs, you're turning them out onto country that's got the capacity for them to put on there 150 to 200 grams a day. It's looking good. And of course, all this plays into the whole agricultural field where at the moment, everybody's optimistic, everybody's happy. It's still raining down here, and we're looking for a bit of sunshine, but let's see how this all unfolds. So thanks, Adrian.
Thank you, Rob.
And look, we'll be back again next week. We'll have another set of thoughts and ideas for you, but if you really want to get to the crux of what's going on, have a look at mercado.com.au, and you can see where all of our analysts are publishing each week, and we'd love to hear from you. And I'll leave Liv sum up and sign off for now. Thanks, Liv.
You pretty much said it all for me there, Rob, but thank you to you and Adrian for your discussion today. A lot of abnormal global and local issues impacting markets at the moment, but I think it was Jason Strong from MLA who said that abnormal is really normal in livestock markets, particularly in the last few years. So I appreciate your work in helping us understand what it all means. To our listeners, if you enjoyed the episode, make sure you hit subscribe, share it around, and give us a review or rating. And until next week, take care.